Let's break down deposit guarantee schemes, the essential safety net for your savings, and a cornerstone of trust in the UK's financial system. Imagine you've worked hard, saved diligently, and placed your money in a bank or building society. What happens if that institution suddenly fails? That's where deposit guarantees come in. When you put money in a UK-regulated bank, building society, or credit union, you're protected if that institution fails. This means your savings are not left to chance, and you won't lose everything if the worst happens. This system gives you peace of mind, knowing that even if your bank collapses, your cash, up to a certain limit, is safe and secure. It's designed to help you sleep better at night, confident that your hard-earned money is protected from unexpected events. Without this guarantee, a simple rumor or a piece of bad news could spark a bank run, with crowds rushing to withdraw their money. This panic could cause chaos, and even healthy banks might collapse under the pressure, threatening the entire financial system. The deposit guarantee acts as a stabilizer, stopping panic before it starts. It reassures you, and everyone else, that your money is protected, no matter what happens behind the scenes. This protection isn't just for the wealthy or big businesses. It's a right for every saver, whether you have a little or a lot. From students to retirees, everyone benefits from this safety net. In the UK, the Financial Services Compensation Scheme, or FSCS, is the organization that provides this protection. It's a government-backed scheme, designed to step in quickly if a bank or building society fails. The best part? You don't have to do anything to benefit from it. The protection is automatic and completely free. There's no need to sign up, fill out forms, or pay any fees. As long as your money is in a UK-regulated bank, building society, or credit union, you're covered by the FSCS. This includes most of the places where people keep their savings day to day. The scheme is funded by the financial industry itself, not by taxpayers. Banks, building societies, and credit unions all contribute, creating a collective safety net that protects everyone's deposits. If your bank fails, the FSCS steps in and returns your money up to the protected limit, currently $85,000 per person per institution. This process is usually quick, so you're not left waiting for your money. Deposit guarantees are the foundation of trust in the UK banking system, giving everyone the confidence to save, spend, and invest for the future. Here's the big news, something that could make a real difference to your financial peace of mind. The Bank of England has officially raised the deposit guarantee limit to $120,000 per person, per institution. This means that if your bank or building society were to fail, the Financial Services Compensation Scheme will now protect up to $120,000 of your money, instead of the previous $85,000. So if you have up to $120,000 in a single UK-regulated bank or building society, you're now fully protected. This is a significant increase, giving savers more confidence and reassurance that their hard-earned money is safe, even in uncertain times. But remember, per institution is key. Some banks operate under the same banking license, so if you have accounts with different brands owned by the same group, your total protection is still $120,000 across all those brands. Always check who holds your bank's license before spreading your savings. For most people, this new limit will cover their entire savings, offering a much stronger safety net than before. It's especially reassuring for families, retirees, and anyone saving for a big purchase or rainy day. The change comes as a direct response to rising house prices and the increasing cost of living. With property values and everyday expenses climbing, the old $85,000 limit just wasn't enough for many people. Now, the protection is more in line with today's financial realities. Regulators want you to feel secure about your savings, so you can keep more money in one place, making it easier to manage your accounts, access better interest rates, and plan for the future without worry. This change gives you greater flexibility and security for your money, whether you're saving for a home, a holiday, or just building a financial cushion. It's a major boost for consumer confidence, helping people feel more comfortable about saving larger amounts and trusting the UK's financial system. The UK's savings safety net just got a lot bigger, so you can save, plan, and invest with even more confidence than before. For years, the deposit protection limit was $85,000, a number every savvy saver knew. But with rising costs and bigger savings goals, that old limit was falling behind. The new $120,000 cap is a 40% increase, reflecting today's financial realities. Now, saving for a house or big life event is simpler. You don't have to juggle multiple accounts just to stay protected. For joint accounts, protection is per person. Couples now have up to $240,000 covered in one institution. This is a game changer for families and anyone saving together. The move isn't just about keeping up, it's a real improvement for millions of UK households. The new limit matches what people actually need to feel safe. It's a major upgrade for your financial peace of mind. Why raise the limit now? Inflation. The $85,000 protected in 2017 buys much less today, so the Bank of England's Prudential Regulation Authority acted. They considered a smaller increase, but persistent inflation pushed them to $120,000 for a future-proof safety net. This ensures the guarantee remains meaningful as prices and savings needs rise. Sam Woods, PRA Chief Executive, said the change is about maintaining public confidence. It's a proactive move to keep your savings protected in real terms.
Imagine waking up to the news that your bank has suddenly closed its doors. It's a scary thought, but let's break down exactly what happens if your bank fails and what you can expect as a customer.
The Financial Services Compensation Scheme, or FSCS, steps in automatically to protect your money. You don't need to fill out any forms or make frantic phone calls. Everything is set in motion behind the scenes as soon as the bank's failure is confirmed.
The FSCS works closely with the failed bank to get a complete list of all depositors and their account balances. This means they know exactly who is owed money and how much, so nothing slips through the cracks.
If your savings are within the protected limit, currently $85,000 per person, per bank, or $170,000 for joint accounts, you're fully covered. In some cases, like temporary high balances, protection can go up to $1 million. Most people get their money back within just 7 days, so you're not left waiting and worrying.
The FSCS might send you a check in the post, or they could open a new account for you at a different bank and transfer your money there. Either way, you'll be told exactly what's happening and what to expect next.
But what if you had more than the protected amount, say $130,000 in your account? The FSCS will pay you up to the limit, so you'd get $85,000 back quickly. The remaining $45,000 isn't automatically protected, and you'll need to claim it through the bank's insolvency process, which can be slow and uncertain.
To try to recover the extra money, you join the queue of creditors in the insolvency process. This can take months or even years, and there's no guarantee you'll get all your money back, as it depends on how much the bank can recover from its assets.
That's why it's wise to spread your savings across different banks, making sure you don't exceed the FSCS limit at any one institution. This simple step can help you avoid unnecessary risk and keep all your money protected. The whole process is designed to be fast, efficient, and to give you peace of mind, even in a stressful situation.
Thanks to the FSCS's quick action, you're not left stranded or out of pocket for long. Their job is to make sure you're looked after.
The system is built to protect your essential cash, and to do it as quickly as possible, so you can get back to your life with minimal disruption.
It's a safety net you can count on, giving you confidence that your savings are secure no matter what happens.
That's real financial security, and it's there for you, just in case the unexpected ever happens. How does the UK's new $120,000 limit compare globally?
In the EU, the standard is $100,000, about $86,000. So the UK now offers much more protection.
This gives the UK a competitive edge for savers and signals a strong, safe banking environment.
In the US, the FDIC covers $250,000, about $190,000, so the US still leads, but the UK is now well ahead of Europe.
The UK's move positions it as one of the safest places to save in Europe.
We're not at US levels, but the UK's new cap is robust and generous for most savers.
The Bank of England's decision is about more than inflation. It's about making the UK a premier destination for safe saving. The UK now stands out for depositor protection.
Meet the FSCS, the emergency service for your money.
They're an independent body funded by levies on financial firms, not taxpayers. Their job, protect you if a bank, building society or credit union fails.
The FSCS's protection is automatic and free for consumers.
It's like all banks paying into a collective insurance pot, ensuring payouts when needed. The FSCS also covers some investments, pensions and insurance. Check their website for details.
Their most important job is protecting your deposits fast.
After past crises, the FSCS was overhauled to pay most claims within 7 days.
They're the guardian angel behind your savings. Sometimes you'll have more than $120,000 in your account, like after selling a house or getting an inheritance. The FSCS offers extra protection for temporary high balances from certain life events. This protection now covers up to $1.4 million for 6 months, up from $1 million. It's designed for big, one-off payments, like property sales, divorce settlements, or compensation. For 6 months, you're covered above the standard limit, giving you peace of mind during major life changes. The system adapts to your real-life needs, not just static savings. So, what does the new $120,000 limit mean for you? In a word, security.
It's a clear signal that protecting savers is a top priority. You can now keep more in one account, simplify your finances, and worry less. Couples with joint accounts get up to $240,000 protected. Huge peace of mind for families.
The new limit also future-proofs your savings, keeping pace with inflation.
It's a forward-thinking move that grows with your wealth and life goals.
Whether you have $100 or $100,000, the UK's system is now stronger than ever. The $120,000 limit, plus $1.4 million for temporary high balances, makes the UK's scheme world-class.
Keep saving, check your bank's FSCS status, and rest easy. Your money's never been safer.
That's the power of a modern deposit guarantee.